Good evening, everyone. Let's start from where we ended last week. We were going through the trend confirmation. And once the trend is confirmed, if we believe that the trend is confirmed, then we go, we make use of that trend to always follow or be a part of the correct side of the trend, right? If it is an uptrend, then obviously we will be on the side of the uptrend, which means we will be waiting for the opportunity to buy, not to sell, right? And then we were going through the basic steps, some of the basic steps that that are useful for us to look at the trend, which is in this case is the uptrend. And as a result of that, we were talking about the lows and the lower highs, and then at this point when it registered the last lowest low, then we were looking at the high, then we looked at the higher low, then the higher high, right? So then in addition to that, we use the 20 simple moving average, or the 20 DMA, daily moving average. And when we see that number one, based on the price action, when we see that the lower low, the higher low, and the higher high is formed, and the fact that the prices are extending, rather in an uptrend in the daily chart, we would go by that trend, and we will be following the trend and move into the 15, or rather the shorter time frames. And there are many shorter time frames we were talking about, from all these very short periods to relatively medium types of periods, and then we will which are used for our entry positions, or to correctly identify the time to enter for a trade. At this point of time, I just remembered that here we are talking about trading, right? Sometimes we will wonder as to why we bought a certain stock, right? And then we are still holding on to the stock when the prices are fluctuating at a lower rate than at the price that we bought at. As a result of that, whether we would be in two minds as to whether we should be making use of the present trading opportunities, rather than blocking our funds in a stock where we went and bought in order to hold, right? Buying and holding is one strategy, right? So the risk that we are taking in a buying and holding, or a buy hold strategy, is that up to the point that it comes down, we don't really it doesn't matter to us, because the reason as to why we would buy into a stock in order to buy and hold will be on the confidence that we have over the future prospects of that company, right? And based on the future prospects, we believe we will get a very good return, right? And especially in the case of, we have seen in the modern markets, the most popular market is the cryptocurrency market. And the fact that cryptocurrencies have given huge returns for those who are holding, which is known as holding for your dear life, or HODL, hodl, you have the opportunity of making very lucrative profits when you're buying and holding. So if we have taken a buy and hold, sorry, excuse me, if we have taken a buy and hold strategy or buy and hold weave, then we don't need to worry about the present fluctuations or the short-term fluctuations. The reason as to why we are looking at the short-term fluctuations and looking at the right trend to be in is because to explore the possibilities of capturing certain moves so that we can make short-term returns, right? So buy and hold is one strategy. Who are following that are not really worried or concerned about the short-term fluctuations, right? And if we stay here and try to sort of reflect on the buy and hold strategies and the people who bought into certain stocks, one classic example that I have personal experience in is Valuable One. If we go to Valuable One chart and move into their monthly chart, you will see that they started in 2011 July, and when it started it was at 36.25 the open price. In fact, this came in the IPO or came into the market at 25 rupees, right? Thereafter, you can see in a matter of a very short period, less than in 1 year, it came down to a low of 12.59. These are adjusted for dividends and all. So basically around 12.50, 12.60. Thereafter, you can see here, this is in May 2020, it came down to 10.40, 10 rupees and 40 cents. So the people who bought at this top at about 36.80, right? The only thing that they got was the dividend. Thereafter, they didn't, regularly, this company was paying dividends. So apart from the dividends, the shareholders didn't get anything until this period. Until this month, that is on in January 2021, right? Last year, January. Until then, people who bought and held had to wait for these long years to benefit out of this, right? And also, we must remember that the reason as to why the prices didn't go up for this stock was also due to the overall market conditions, right? There were due to the negative or the downtrend that the market followed ever since for a long period of time. This stock also could not rally, but there were small rallies in the short periods. But overall, people who bought at 36 rupees or 36.80 could not benefit until 2021 January, right? So that is but then you can see from there the prices, rather the returns, they would have got up to this. That was 147%. Here it's 179%. So a person who is buying and holding is a different person. And here in this instance, and most of the time, when we are looking at the technicals or analyzing the technical analysis, we are looking at the short-term opportunities. So that we have to remember very, very clearly. The next thing is coming back to the stock, the CAC or rather the ASI. Now, you can, okay, since we are in the monthly chart, you can see the monthly chart is below the 20 period moving average. So on a monthly basis, the 20 MA is for 20 months. So it has fallen below that. You can see there are so many instances where the ASI has come down below the 20 period moving average on a monthly basis, right? So in a scenario like that, we will be concentrating only on the swing lows and how the swing lows are going to perform, right? Relatively starting from January this year, it has come down to this level in a matter of little over 3 months. Latter part of January only the prices start or the market started falling. So a little over 3 months continuously it has come down, and we can see the fall is something like 50% odd. Sorry, 43 to 44%. If you go back and see, right, major falls has never been that great, right? This is in 2011. You can see that it came down 39%, right? Now here also there was a shocker during the COVID period, but there again didn't come down that much, right? So we can see that in a matter of here, actually it has taken 1, 2, 3, a little over 4 months for that 20% odd fall to happen from here to here, 32%, right? But in this instance, it has fallen in a matter of a little over 3 months. So other thing that we can see here is that if we make use of our strategies, our rules, right? Even amidst these negative sentiments, when everybody is negative, there are opportunities, right? And this is the monthly chart. Even in the case of the monthly chart, you can see that there had been opportunities for people who would have used this period and made use of it for entry positions. So that's overall we need to see that when the market is really strong, right, there are chances, especially when the prices have fallen to this magnitude, right? When the market falls to this magnitude, we have to be very, very closely watching. We should be vigilant to see the opportunities that will come our way. That's why we used to call the present situation is a situation where we have to seize those opportunities, right? That is very important to understand. Seizing opportunities, because that is what we have to look at. And now moving on to the daily chart. In the case of the daily chart, as I mentioned, we were looking at the two-step approach. The first step is the price action. The second step is the 20-day moving average crossover. Now people are asking what is happening now, right? Remember, this is how the market is performing when the prices are going up, right? We believe in support and resistance levels. So the moment the prices go up to this high, then hits a low which is higher than the previous low. Then it breaks the previous high, moves into a higher high, then moves back into another higher low, right? At that point, just like any other time, we need to look at or watch how the highs are going to perform, right? Now here there was a high, it was broken out. So obviously this high also have to be broken out, but that didn't happen. It went up to a certain level, but way below the higher high. Then at that point, so at any given moment, you have the support and resistance levels, right? The moment it went and tested a high here, right, it came down to this low. So if by any chance the prices and after coming down to this level, we can see that there is a reversal to the upside, right? So at that point, the high of this and the low of this level was testing as the resistance area, which in turn, if that succeeded and the index broke the high, then obviously this area would have been the support level, right? Here also the same thing happened. It went up to a high, then the higher low, it trended, broke above this, and as a result of that, that peak became the support, not the resistance. Here also the same scenario, due to the fact that it came down, the index came down below this level. Obviously this area, if we highlight that area, this area will be acting as the resistance area, right? This is nothing to do with Fibonacci's or anything. It's just purely on the basis of the highs and the lows, right? Now, at that point, you can see these, the last 3 days, it was trying to test this low, which is 8,154.75, right? Here, it was 8,154.8, oh, sorry, 18. Here, it's 8,154.24. Here, it was lower, that is yesterday, right? Again, 8,137. So 3 days in a row, tried to test that area, meaning tried to move above that area. That didn't happen, right? And incidentally, the Friday's candle close is lower than the 20-day moving average. Now, just because the 20-day moving the price, rather the index comes down below the 20-day moving average, short term it is bearish. That does not necessarily mean that the market is going to crash based on our emotions, right? Emotions aren't the main force for the market to go up or come down. I mean, individual emotions. If you have the overall sentiment, right? The overall sentiment will determine the directions. But just because I have a negative sentiment doesn't mean, or a smaller section of people are having a negative sentiment will not bring the market down. But majority, if they feel it's negative, then that is a force, right? So until the price action gives us that information, we can't just conclude on ourselves or by ourselves that things are bad, right? So the next thing that we will be looking at is this high, this low, and the previous high, this area. So if we take the present range, it will be like this, right? This is the range. So now we have to look at this area of support, whether this is going to be respected as the support level. That is above 7811 and below 8154, right? between 7811 and 8154. We have to see how the market is going to behave based on this range. The next thing that we will be looking at, right? Sorry. Now, this is as far as the support and resistance levels are concerned, based on the price action, the highs and the lows, right? My idea today is to stretch on the uptrend formation, not only in the ASI, right? Just because the ASI is coming down or going up doesn't mean that we don't have opportunities, right? So we have to learn or kind of start training ourselves to look at the opportunities by using the steps that we can follow in identifying trends, right? So here, the most easiest way of looking at the trend confirmations, apart from the price action and the 20-day moving average, will be to understand how the prices are behaving based on the 50-day moving average, 100-day moving average, and the 200-day moving average, right? So as it is, we know that the market is too early, because early in that trend, right, the moment we see that the prices have not gone above the other longer period or medium to longer period moving averages, that means the market is, or the trend of this instrument, which is the ASI, is still in its early stages. The trend is in the early stages. So when a trend is in the early stages, obviously there is a lot of anxiety, a lot of impatience, right? There's a lot of fear, uneasiness in the market, right? People are not really convinced that there is an uptrend. However much we go and tell them, nobody will be believing that we are in an uptrend, right? If things are very, very bullish, right, people who will be participating even into programs like this will be higher, right? That is okay, because when we can understand and we learn how to make use of these basic data to capture those opportunities, that is what is important. One of the most important clues or secrets that we need to understand is that everybody takes decisions or makes decisions on their own, even though we are within a larger crowd, right? Everybody takes individual decisions, right, amongst a larger crowd. So that we have to understand, right? We are alone when we are doing, when we are putting our buy order or sell order, right? We are alone. We are the ones who are making use of it, right? As a result of that, we have to be ourselves, right? Our individual maturity, our individual approach to understanding, to find out the opportunities. That is what is important, right? We need to believe that there are opportunities in the market, and we are in a journey to explore those opportunities and make use of them, right? So that is very important. Therefore, what we will be looking at is to understand the counters, right, who have shown us the strength of their individual trends, strength of those trends, where the prices have gone above all these time frames, right? That is the second step. That, I mean, today that is what we are looking at. We will be looking at the counters, right? Your one person shared in the chat the counter that he's interested in looking at. Similarly, all the others also can indicate your whatever the stock that you want to look at. And just let's see what are those stocks that have beaten or crossed above all these 4 major moving averages, right? First of all, I'm going to cover those popular stocks, right? Everybody, you will hear a lot of stories about those stocks, right? And everyone prefer to be with them. Everyone would like to trade them. Let's see how they are performing based on all these moving averages. Let's take Expolanca. Right. Expolanca is at a critical stage. Why is it critical? Because you can see that the 20-day moving average has been broken and now in the verge of testing, right? And this blue color is the 50-day moving average. Again, it's testing means the 20 days finding support, 50 days also finding support. This is the black one, is the 200-day moving average. That's also got tested. And now we are, the prices are behaving or trading within the 20-day moving average as a support. The immediate resistance is at 50 days. And then you have a resistance at the 200-day. So this is still, it's once again in the early stage of the trend, right? So we have to understand something that I myself understood is that when we are building up a trend, or we see a trend is forming, it is very fragile. Fragile means it can break. It can have so many unwanted things against our own expectations, so the trends are fragile. So at certain stages, it becomes more stronger, right? So we have to give the trend its deserved period to build up, right? No one can. That is why it's very, some people learn the hard way to make trends. They try to make trends, but they can't, right? That is an unfortunate thing. Sometimes they lose a lot of money trying to do that. But when the trend is building up and goes into a stage where the maturity of the trend is very strong, right? Then only it becomes very, very profitable or very useful for us to be in that stock. Here also, the basic 2 steps are confirmed as an uptrend. So we have to respect that. But at this moment of time, it is trying to establish a certain upper level of support. At the moment, it's within a resistance zone, right? From probably from this low of 198 to this high of 229 is where this trend is trying to form its strength, right? So we need to be mindful of that, right? That is how the trends are. That's the normal way the trends are building up, right? Either way, when the prices are falling or prices are going up, it's the same, right? So until this is breaking above all these four time moving averages, we need to we have to decide whether this is the best stock to trade, or whether this is the stock that we will be we will be benefited of, right? Or whether there are other stocks. Brown's Investments is the other one. There again, you can see the 50 days acting as support, 20 days is below that, 200-day is as resistance. We went there, almost kissed it at 1080, right? So it's within that. So this trend is trying to form a base at the top, which is the resistance level presently. So it got to form a strong base. Thereafter, there will be it can move to the next level, where the 200-day and the 100-day moving averages will be broken out. Then LOLC, you can see that the 50-day is acting as the resistance, 20-day is the support, right? So again, same scenario. In this zone, it has to form a base, and it has more. We have to give it time for the uptrend to form. Move to the next stage, and there are it has to. We have to basically give time for the prices to break above the 200 and the 100-day moving average. LOFC is another one. Here again, just like the ASI, it's trying to stay above the 20-day moving average. Here you had the high, you have the high low, you have a high here, higher high. Then this is the low, thereafter 860. And it is testing the 20-day moving average and resisting that 860 area right now. Basically, it's trying to be within 910 and 840, right? But there can be support above 740 for this, right? Because this is the high. So any breakout below can come and can come and test this level, that is 740. Right, so it's in the early stage. As a result of that, the trend is fragile. Then we move on to AAIC. These are the 6 stocks that were moving after that major fall. And here also you can see the 200-day moving average. The prices have broken above the 200-day moving average, broken above the 20-day moving average, and the 200-day and the 20-day moving average is acting as support at that point. And also the 200-day moving average has crossed above the 20-day moving average has crossed above the 200-day moving average. 50 days resisting, and major resistance is here, where after this major rally, as the prices have gone and tested the 100-day moving average, but then failed, and taking support primarily between the 100-day moving average and the 200-day moving average at this moment of time. So still it's forming the as a result of that, it has not gone above all 4 moving averages. Final one is LIOC. You can see in the LIOC, it's a different story, right? The 20 broken, 200 days broken, 50 days broken, and the 100 days broken. and for some reason or the other, this retracement has tested exactly the 100-day moving average and closed higher. Basically, it opened, came and tested that level, and went to a high and closed way above the 100-day moving average also. So based on the breakouts of these 4 stocks, or rather 4 moving averages, LIOC is the only stock out of those 6 stocks that we looked at. Is it had basically, I would say, has broken and moved into a stronger trend than the previous 5, right? Strongest trend since it has succeeded in breaking out the moving averages of these 4 types of periods. Right now, what is happening is that it is testing, or rather yesterday it went up and almost tested 6680, but closed lower. Right, so this is an interesting formation. We need to see what will happen to the counter from Monday onwards. Right, so now out of these 6 counters, we can make use of, as I mentioned earlier also, last week also, when we have that basic uptrend confirmation where the higher low, higher high formation has happened, and then the prices have gone above the 20-day moving average, we can move to shorter time frames and make use of the same entry positions by using our different types of strategies. Right here, there is more involved. Right, so here, in the sense, due to the fact that all the time frames have been broken, you have more activity happening in the LIOC counter. Right, there again, we have to follow the same basic principle of entering based on our buy or entry rules. Thereafter, I went and searched for the plantation companies, because apart from LIOC and the other main counters, or the most popular counters, which I covered just now, the plantations are the one which were active. So let's take Balangoda. I'll start with Balangoda. Balangoda also has broken all the 4 types of moving averages, and incidentally, it took resistance at this range, and we can see on Thursday it has broken out and closed above this area, and yesterday also it came down to test that almost that area and closed above the opening price, or rather the closing price of Thursday. Closing price of Thursday is 32.30, and yesterday's close is 33.50, and yesterday's opening had been 32.40. Right, so this is moving into the next stage after breaking out of this area. Right, it's moving to test new highs. Okay, now I'm not going to there are so many things that we can see here, so many things, but the approach here is to look at the trend in the daily time frame and then move to the lower time frames. Right, so right now we have 2 companies, that is LIOC and Brown's Investments, LIOC and Balangoda Plantations, which can be taken to the shorter time frames to understand what what is in store for us from Monday onwards, right? Or what we should be expecting or should be looking at from Monday onwards. That's on Balangoda. So we have LIOC and Balangoda. Then let's go to another counter, Kalani Valley Plantation. Right, Kalani Valley Plantation, you can see, right? What we are looking at is a breakout of all the 4 moving averages, but Kalani Valley is not like that, right? So for this analysis, we are not making use of Kalani Valley. That is why I'm saying, just because the prices are going up, right, whether it's in a sector, doesn't mean that all the companies in that sector will be useful for us. That's why it's very important for us to have a watch list, because in that watch list, you know, there will be certain counters which will take the lead. Now LIOC took the lead, went up, right? Followed by, I mean, after that only Expo Lanka, Brown's Investment, all those popular counters also went up, right? Then by the time those counters were going up, LIOC retraced. Thereafter, again, LIOC took a threw back, tested that resistance area and turned that into a support, and now trying to break above the 6680 and trying to move above that resistance level, right? But the other 5 counters didn't do that, right? In the plantation sector, Balangoda plantation has gone above all the 4 time frame for moving averages, and now testing a higher level. Whereas Kalani Valley plantation, even though that also has a positive sentiment, is not happening. Rather, it hasn't gone above all the 4 moving averages. So we need to be mindful of that. So when we understand that, then we will not be trading the Kalani Valley, but we will be looking at the Balangoda plantation movements, right? Then let's take Lankem development. Lankem development also won't qualify because, of course, it's testing a key area of the 200-day moving average, and on top of it, you have the 100-day moving average, right? But then the prices haven't gone above those, above all 4 moving averages. Then let's take Kottagala plantation. It's way low. The trend is still fragile, trying to build up. So let's avoid that. Then LPTA plantation. Again, the same story. Testing a key resistance area, right? But below the 100-day moving average. There can be a chance that it has to break, obviously, above the high of 98.50. Then let's move on to Agalavatta. Agalavatta has broken above the 20-day moving average, but again testing a key support area, that is 2780, and this high or the close of 27 rupees. So 2780 to 27 rupee area could be tested. At the same time, within a day, there is a long impulsive candle here. So we need to watch that. So it doesn't fit into our category. So now, right now, we have only, still we have only 2 counters, LIOC and Balangoda plantations, after covering more than 10 counters. Then we'll go to Namunukula plantation. You have the same scenario, right? It has gone above the 200-day moving average also, right? But testing that level, taking support at that. Whereas the 50 and the 100 are acting as resistance levels. Then let's look at the muscular. Muscular has broken all the 4 moving averages quite swiftly, right? Even there are consolidations over here has been short-lived, only a few days. It has taken, tested that area and broke out. Here also the same story, a few days, then it has broken up with a gap, and it has gone up here. So another counter that we will be looking at will be muscular plantation. Then we'll go to Hatton plantation, HPL. Hatton plantation also, all 4 moving averages are broken, and with a gap it has gone up, and now again this is the daily chart trying to consolidate at this level, right? So Hatton plantation. So we have 4 counters now: LIOC, then Balangoda, then Muscalia, then Hatton plantation. Right. Then let's look at Watervilla plantation. Same company. Watervilla is below the below all 4 moving averages, taking support at this area. Thereafter, since it's in the same group, Sunshine Holdings. You don't have a trend here. It's still in the early stage, right? Then Talawakale plantations. Right. Talawakale also has gone above all 4 moving averages, and now testing a strong resistance area. Need to break out above in order to move to higher prices. Since Talawakale also has broken out, we will be looking at that. That's about the plantations. And then I saw MGT, PLR, HBS, XPAC, all that, right? So before going to those counters, let's look at the ones that we spotted amongst these about 15 counters, right? We had LIOC, we had Balangoda plantations, Muscalia plantation, Hatton plantation, and Talawakale plantation. So after searching 15 counters, right, we could identify only 5 counters. So we are now moving to the 1-hour chart on the Talawakale plantation. Right. When we are here, we will be making use of only 5 period and 20 period moving averages. To this, we are using the PSAR, MACD, and the RSI. PSAR, RSI. Okay. Give me a pen, will you? Right. Now, in the we have few choices. Either we make our entry on the hourly chart, right? Or either we make our entry in a much shorter time frame. Some used to say 1 minute chart, some used to say 5 minutes chart, right? Some used to say 15, 30, even 45 minutes, and so on. Right? So in the case of the 1 hour chart, the PSAR is below the price line, right? The RSI is above 50 points. MACD line, which is the blue color line, is above the zero center line, right? That is because it's a major move, right? So that is bullish. But then we will be waiting until the MACD line crosses above the signal line. At the moment, at the same time, we will be looking at this area, right? This high of 61.40 and this high of 62 rupees. It has to break. And then some people ask me about this, how to identify different types of patterns. Here we can clearly see a sideways movement at the top. So we use a trend line to make use of that, right? I'll take this level of 61.40 as the top. Also, you can make use of the channels and go from here and extend it to 62. Right? But in for me, even 61.40 is okay. So 61.40 is the parallel resistance line. Then you can see that there is a high-low formation over here, right? So I will be making use of that high-low formation to draw a trend line like this and join up from up to here. I'm making use of only 2 points. That's the minimum standard. Everybody knows that, right? The minimum standard is to identify 2 points and then you draw your trend line. You can do the extensions thereafter. Right? I will take it up to here. Okay. So some, when the trend is, in the case of Talawakele, the daily chart, we saw all 4 moving averages were broken out and now testing this area. Any breakout above that, above this 61.40 or 62 rupees, right? There is a chance that the prices can go up to certain levels. And by using this pattern, right, we can make projections. Now, this is called an ascending triangle. Reason is the lows are ascending, going up, but the high is flat. Moment a breakout takes place from here, the chances of the prices going up are greater, right? Most of the time that happens, especially due to the fact that the prices have gone above all four major moving averages. There is a chance, but in order to get it more accurate, or to take a position with more accuracy, right, in order to kind of avoid a lot of negativity, right, we can use all these options to enter into the counter, right? Just because the price is trending here, we are not buying, right? Normally, when we use the patterns like this, right, there are, I mean, we can make use of the pattern, enter into that by using different types of stop losses, right? That's a different story. Here we will be looking at the entry when this MACD line is above the signal line, because all the other indicators, PSAR is below the prices, RSI is above 54, right? And ideally, we have to see how the hourly volumes are also behaving, because over here in this major, the initial rally, we can see the price, the volumes have increased, even though the volumes are bearish. That is because there's a bearish close on the price. That's why it's red, right? Well, we have to understand, even at a bearish close, right, people have bought. So we need to understand that the prices, the volumes have increased. And when there is a consolidation, normally the volumes are decreasing. The reason as to why the volumes are decreasing there is because the buyers, right, are accumulating. When the buyers are accumulating on a high-low formation, right, it is positive. So in that scenario, there can be a situation where the breakout above this will happen with volume, right? So ideally, if we see that volume increase, and also the MACD line crossing above the signal line, that will be an entry position, right? At the same time, there is another entry where you can use the buy stop limit, and either you go in at 62 rupees, or little above the 62 rupees as the stop. Say 62 is the stop and your limit is 62.10. That also is possible, but still you will have a there's obviously a risk there if you're not waiting until the MACD confirmation is happening, right? It depends on your confidence on this counter, right? So that is the 1 hour chart. You can also go a little lower than, or to a shorter time frame chart, right? Here you have 15-minute chart, right? In the case of the 15-minute chart, you can see that it is bearish, even though we see still it's within this pattern trying to build up, right? That 15-minute chart, we can see that the MACD has crossed below the signal line, and the RSI has crossed below the 50-point line. PSAR is above the price line, right? So that is another important point to remember, right? So even if you are making use of the 15-minute chart, you have to go by the indicators. If the indicators are giving you that clear signal, then you have to make use of it. There again, when there is a breakout, right now here, there's a huge, this impulsive candle has a huge margin from 58.40 to 62 rupees. Within that 15 minutes, it has gone up, right? And also you can see the volume is relatively high, right? Compared to the rest of the market, rest of the period, right? And we need to be mindful when we are playing or when we are trading, the plantation counters, right? The amount of shares that we are buying, the quantity, we have to be really be careful of, because these are relatively illiquid counters, right? So if you try to take large positions, sometimes, and you want to trade it, sometimes you will not be able to get the real return out of it, because sometimes you might be stuck with quantities which will hamper your trading activities also. So remember that not only Talavakale anyway is illiquid, because traditionally it has been the case. So Talavakale, that's why, even for a major move from 58.40 to 62 rupees, only 6,824 shares had traded. So remember, now in here, let's take, here it's 88,000 shares. If we go to the 1 hour chart and we saw some major activity, here it's 154,000 shares, right? So we need to bear that in mind when we are trading plantation counters, right? Then the next counter that we saw is Hatton plantation. In the hourly chart, we see that the prices meaning MACD signal line, MACD line has crossed above the signal line, it's above the center line, all bullish. RSI is at is above the 50 points, that is also bullish. PSAR is below the price line, that's also bullish. But the only issue is this high and this low, right? In the hourly chart, 2 days ago it has happened. So we will have to look at how the prices are going to behave within this area, that is from this low of 1110 to this high of 1380, right? This area, I mean, the behavior of this area will be very important. So with that, we can go to the shorter time frame, right? Meaning MACD is bullish, RSI is bullish, the 5-day moving average is above the 20-day moving average, and there's a fair distance between the two. PSAR is below the price line. So how are we going to take a trade on this? Then we have to go into the shorter time frames, right? So now that we have in the case of Hatton plantations, we have the daily chart, which is bullish. hourly chart, which is bullish. But we saw a higher high and a retracement, right? We are not using the Fibonacci's and all those things here, right? We are purely going by the indicators. So over here, you can see that the MACD line has come down below the signal line, right? You have to wait until this crosses over. Based on this strategy, then the PSR has to be below this, right? The volumes obviously will be higher when there is a breakout, right? So that is how we will be watching the HPL moving forward. We can come down to even 5-minute chart and see where it is, right? 5-minute chart is also the same. It's basically, if there is no entry opportunity here, so you got to watch all these indicators and wait until the indicators are giving you. You can use either the 5-minute chart or the 15-minute chart or any other shorter time frame lower than the 1-hour chart, right? Some used to use the 1-minute chart as well. So that's HPL. Then we saw muscalia. Let's go to the 1-hour chart first. Same situation in the case of muscalia, all bullish. Okay. Then we move to the 15-minute chart. All bullish, but there is a bearish close in the 1-hour chart below the present high of 1770, right? So let's move to the 15-minute chart. At the same time, let's have the resistance zone at the moment purely on this, and also we cannot ignore this gap also, right? For the time being, let's wait with this area and let's move to 15-minute chart. 15-minute chart also the same story. It's bearish, right? We have to wait until the indicators turn bullish. RSI, of course, is above the 50 points, just like in HPL and the TPL. We can see that the RSI has gone above the 70 points and now coming below the 70 points, right? So we need to, as long as the RSI is above 50 points, right? At that point, let's say the MACD is going, crossing above the signal line, PSR coming below the price line, those are very important, right? So when we use the strategies, right, what is happening to us is that just because we want to buy a stock, we are not buying, right? We are waiting until the right time. So we can even go to the 5-minute chart and see what is happening. Still bearish, obviously, and everything is like that. RSI has come down below the 50 points, but has closed above 50 points. But that is not enough. Muscalia, that is. Then we move on to Balangoda. First, here. Right. This is also, you can see that there is an ascending triangle, right? I'll take this at 3180. Okay. And also, let's take the low above that, above the gap, and connect with this. right? And you can see that there's a breakout. In the case of a 1 hour chart, 5-day moving average is above the 20-day moving average. PSAR is below the price line. The MACD is almost crossing above the signal line, and it is above the center line. And the RSI is above the 50 points. You have a bearish close here, right? You can see that it is this hammer is at the top. So it's known as a hanging man, right? From here, if you take, this is the top. In that top, you have a hanging man. So it's a negative or a bearish candle, right? At the same time, if you take the entire distance, forgetting this formation of the candle, the distance of the candle, or the distance of the day, for the day, was between 3370 and 3260. Whereas the previous hour, it had been 34 to 3240. So that distance, that range is inside this, right? So that's another bearish formation, which is known as a bearish engulfing formation, right? So there is some, we have to wait for further confirmation. We go to the 15-minute chart. In the case now, in the hourly chart, you can see the MACD is trying to go above the signal line. You can see the histograms also trying to move above the center line. But in the 15-minute chart, right, we can see that there is the MACD line has crossed below the signal line, right? But the rest of it are all bullish. PSR is below, RSI is above, right? The volume, of course, if there's a major breakout, then you will see the volumes also increasing. Then we can check the 5-minute chart also, right? So what is going to happen is that this 5-minute chart is going to show you a bullish movement, right? There will be a bullish movement. The RSI is anyway above 50 points. This has to cross above the signal line. When that happens, right, you can you will see the price action inside this area. Now, of course, we are above the ascending triangle, the resistance line. So normally, when we break a resistance line, there can be a throwback effect, not necessarily coming down to the same area. Here also there is a throwback, but then there is strong consolidation, right? So, at the top, there is absorption taking place. But here, this is the 5-minute chart. So things are bullish for the counter compared to the other 3 counters we saw: TPL, HPL, and the Muscalia. Balangoda has a bullish formation, right? There are higher chances of this area breaking out. Okay, so make use of that opportunity. If you see a bullish reversal here, because already the 1-hour chart, other than the volume behavior, all the others are bullish. Then only this candle, right, it has to break. It has to turn to the other side. So watch Balangoda plantation. Right. So out of 15 stocks, it got fragment. It got shortlisted to 5 counters, and out of the 5 counters, also you can see Balangoda, out of the 4 counters, Balangoda is a stock to watch. Then LIOC is the other one. In the hourly chart, LIOC has tested this area and now gone up to test this level, right? And then the PSAR is below the price line. RSI is above 50 points, right? And the MACD line is above the center line, which is bullish. Then the MACD line is almost to cross the signal line, but it hasn't happened yet. And also there is a bearish close. Bearish close here because it has tested a high of 63.30, 66.30, but has closed below that level. As a result of that, we move to the 15-minute chart. In the 15-minute chart, MACD is bearish, PSAR is bearish, RSI is above the 50 points, right? Retracing from the top. So we need to wait for that. We need to wait for the signals to move into an entry position, right? So LIOC, one good thing in LIOC is that you have volume, right? So that is important. But then again, wherever you're collecting stocks, you need to be mindful of the volumes that you are taking, because don't get caught in getting stuck with volume, right? So you need to understand how much to buy with to exit without getting caught holding it, right? So that is very, very important. Whatever the stock, right? That is something that anybody has to work out. Anybody, a person who is buying in millions of shares to 100,000s to thousands, we need to be mindful, right? So for each counter, you have to understand how much maximum you can move in and take positions. Right. Okay, LIOC 1 hour chart, there is a divergence. Yes. But you can see that there is a divergence from here at this point, right? And then at this point, there is a divergence. At this point, RSI is high. When it went and tested the same value, the RSI is low, right? So there is a divergence, but it's within a very unique situation, because we are talking of 66.30 here, 66.30 here. So it's the same price, right? And then thereafter, you see this formation after this consolidation. Right now, basically, if you take the number of hours from here to here, say up to here, you're talking of how many hours? From here to this point, 9 hours, right? For it to go up, it has taken only 1, 2, 3, 4 hours. So need to watch that. As it's obvious, no, this fall is because of the higher period of the retracement. The RSI couldn't go up because it has just gone up immediately without, it hasn't taken an equal amount of time or a high amount of time. So what happens is that we will find if there is going to be a consolidation here, at whatever the area, right? You will see the RSI normalizing, and then from there, we will see from here. Of course, there can be, let's say this is the top and this is the top. Then we put we draw a trend line from this top, let's say, to this area, like this, right? You have to see whether at least this trend line is broken. That's if you even go back, let's see. Right. Take from here to here. I took only these 2 points, this point and this point, right? Then there is a breakout. So at that breakout, you can see that there is a turning point. So there are so many other factors got involved as a result of that, and all the other indicators also turn bullish, So those are things that we will be looking at when the RSI divergence is there. Touch double bottom. You're referring more to LIOs, is it? Never mind. Okay. So recap. First thing that we are looking at is to see the stock. We are filtering the stocks where the prices have gone up above the 4 major moving averages, 20, 50, 100, 200 moving averages. Then we get the short list. After getting the short list, we move to the 1 hour chart, and then we move to the 15-minute chart. Then also we use the 5-minute chart to shortlist that list which was shorted much shorter to minimize it further, right? That is the principle. Okay. Now, the final stage of this presentation will be to check the others where I haven't, the ones that are requested by you all, which I haven't covered, right? So Muaz wanted Kalani Valley Plantation, I covered that. LIOC and Bill, both I covered. Based on this trend confirmation, only LIOC fitted the list, right? Then you're asking for PLR and Zenith. Let's go to PLR. So the first thing that we will be looking at are the moving averages and how the moving averages have behaved. Okay, so here it's in a fragile early stage of the trend, right? So you have the high-low formation, right? But still very fragile. Things can go both either way, And also you need to understand the reason as to why it came down yesterday is because of the dividend, right? There was a dividend and it has gone XD yesterday. Yeah. 3rd July. So a person who sells on the 3rd would have got 70 cents. I think Madhu was talking about a stop. His position got stopped. but then if he has to take the 70 cents also into consideration and see whether he has lost, right? So if Madhu is around, you check that also, right? Okay, that is PLR. Based on the 20-day moving average and the high-low formation, you can use the shorter time frames, and when the shorter time frames are bullish, you can make use of that opportunity, right? As far as the 1 hour chart, you can see that it is not bullish. It's not bullish on the 1 hour chart. If you take the 15 minutes, also the same story. 5 minutes also. 5 minutes, there is in the sideway movement, the MACD line has crossed, but the others are not giving you any confirmation. So you need to be mindful of that. So let's take the volume also inside. Right. So that's PLR. Then let's go to Zenith. Right. As far as Zenith is concerned, yeah, since you have only a short time period, you can't capture the higher time frames of the moving averages. Now, in the case of the 50-day and the 20-day moving average, we can see that that is the area where it's taking support, and it has taken support and extended to test back again that resistance level, right? So we can use Zenith because these two the prices have gone above the two moving averages that are available in the longer variety, right? But then you need to be mindful of that, of the other indicators, right? So PSAR is below, MACD is above the center line and trying to test or break above the signal line. RSI is above 52 points. If you go to the 1 hour chart, that is more prominent or more bullish, right? There we will be using only the 5 and the 20. 5 is crossing, MACD is crossing, RSI is above the 50 points, right? And there you can take a position. There are few ways that you can take positions on this. One thing is that when there is a retracement here. So in the hourly chart, because of the retracement, we go to the shorter time frame, right? The shorter time frame, 15-minute chart will be the time frame that you can use to enter into the position once the indicators are turning bullish, especially the MACD. MACD, it has touched the signal line, need to wait for that. Then the 5-minute chart is also important, right? Either you use the 15-minute chart or the 5-minute chart to look at the MACD movement. In the 5-minute chart, you have to wait for the RSI also to go up. So you can either use the 15-minute chart or the 5-minute chart and take the lead. This is purely by looking at making use of these main indicators, right? So that's on PLR. Then MGT and expect. We'll come to MGT right? Here also, it has gone up and tested all the 4-time moving averages and has thrown back, taking support at the 50 and 20-day moving averages. But MACD is bearish, RSI is bearish, PSAR is bearish, right? So you go to the 1-hour chart. There again, it's bearish. MACD is bearish, PSAR is bearish, RSI is above 50 points. Then you go to the 15-minute chart. PSAR is bullish, RSI is bullish. Here it's almost testing any breakout over here with some with important volume. There can be a chance. There is a chance that MACD can continue to stay above the signal line and also move above the center line, right? So that also you have to wait. In the 5-minute chart, it's bearish. So you can use here again 5-minute chart. You have to wait until PSR is bullish, the MACD is bullish. You have to wait for that, right? So that's MGT. Then you have the expect. When you don't find, this is normally, I mean, just for a person who is, new to investing.com, when you don't find or a bit difficult to find, you have to go and select the country or rather the exchange like this. Then you have expect here, right? Since this is also relatively, a new company, you can see that the 20-day moving average is trying to break above the 50-day moving average. The prices are in an uptrend. There is a basic trend confirmation, but the PSAR is above the price line. RSI is retracing. MACD is about to cross the signal line below. We move to the 1-hour chart. The 1-hour chart, it's like this, still bearish. Let's look at the 15-minute chart. Same scenario, bearish. Even the 5-minute chart, same scenario, it's bearish. So if you're a person who is looking at expect, you have to wait for the 5-minute chart to give you a bullish formation. Then the 15-minute chart, then the 1 hour, then comes the 1-day chart, right? So if you want to take a position, you wait for this to really build, because even the 1-hour chart is bearish. Day chart also bearish, but things can change if the 1-hour chart is going to be performing better, because if you move one restriction or one negative that you have when you're using the 15 and the 5-minute charts, you got to be mindful that these are very short time frames. So sometimes within minutes you have to exit, because until the formation in the 1 hour takes place, you have a time duration. So you need to understand that. So those are the things that we need to bear in mind when we are using very short time periods. Whatever I covered, so let's see HHL. HHL on the daily chart, it's at the lower end of the trend. Only the basic conditions are there. That interestingly, after this higher high, the next higher low is happening here, which is around this high, right? So from this lower low went up to a high, then here is the low, then it goes up to a higher high. Now it's taking support at this point, which is at 44.90 and 43.90, right? So still it's too early in the trend, in the uptrend. So let's take let's keep that aside. The other one was whatever we shortlisted, and that got removed. Then let's take Swiss Tech. In the case of Swiss Tech, nothing. Even an uptrend is not formed. Right? Went up. There is no reversal here. You have a lower low, high only. So there has to be a high low formation. As long as the price, meaning the next low, is at this low of 13 rupees or above, right? We respect that. Now here, why we are using this as the lowest low is because the previous lower low is this, right? And previous lowest low had been this, right? But this is lower than that. So there was a lower low here, a high here. Then unfortunately, the price broke and came down to this lower low. So from here only, we have to now watch. So we have to just keep an eye on that. Recess energy. So this is basically a lower low compared to this low. This low is 13 rupees. Here it has come down to 12 rupees. So there is no uptrend or any, even the lower low and the next high is not there. So there is no point looking at it. Brown and Company. Okay, you have the minimum standards, right? But these are not broken out. So it's, once again, it's in the initial stage, forming a base. So that's it. If you want to trade, you can go to the 1 hour chart, 15 minutes or 5 minutes and take a trade. Once again, 5 minutes is very short. 15 minutes is a little bit longer than that. So you need to, if the 1 hour chart is not giving you, until that, one indicator for the prices to build up will be that a breakout above this, right? So we need to be mindful of that. Until then, even the shorter time frame charts may not give you any direction. LOLC holdings we touched. Haley's PLC. also, it's like this, still bearish. It's still in the early stages of the uptrend. Uptrend will be we will be looking at or we will consider that this as an uptrend as long as this low is respected, 50 rupees. It has to be above the 50 rupees. Thereafter, there can be a retracement even up to 50 rupees, but it cannot come down below 50 rupees. Within that period, you have to see how the moving averages or rather the other indicators are performing, right? You can use the other. This is the daily chart, the 1 hour chart we just now saw, 15-minute chart, or the 5-minute chart. Lalu, Lanka Aluminium. Still too early. So when we are short listing, this won't fit in. Richard Pearis. Still in the early stages of the uptrend and consolidating. So we looked at, apart from the 15 or so counters that I covered, right? Now we have added more, little over 20 counters. But you can see that when you are shortlisting, downsizing the whole list, you got only 2 counters, LIOC and the Balangoda plantation. Right? Then you have, as I mentioned, you have the Haddon plantation, Talawakele plantation, and Muskelia plantation. So you have 4 plantation companies and 1 an LIOC. Those are the 5 counters that you saw, where the prices have broken all 4 moving averages, right? Brown's investments we went through. There again, Brown's investments also is in the early stage of the trend. Once again, if you want, early stage of the trend. So individually, any of you can do the same thing. You just load all these time frames or the moving averages. You go to the moving the list in indicator list. Go to the moving average. Click on this. Here I have used 5 indicators. So 5 times you click on this, and then you have to go to this format button and do your you have to put your time periods under the inputs. Then you can use the color code and make use of the, normally by default it's something like this, right? So you can increase it up to that to the maximum, and then use your color, and you can even thicker it like this, or you can keep it like that. Right here I have hidden that moving average, because for the daily chart I was using only the other main averages. Otherwise, if you click on this show or hide button, you will see that. If you go and click it, it will get hidden. So Browns is also not in the short list. Mailstar. Okay. As far as the trend is concerned, you can see that it's still in the basic stage or the early stage, trying to build up. Then something important is taking place here, because the high is 44 rupees. Then it has broken above 44 rupees here, tried to go higher at 45 rupees, then again retraced, right? So, based on the strength of the trend, right? It is still at an early stage. But of course, if you want to, take a trade on this, then you can go to the 1 hour chart and check the check how the trend is forming. 1 hour chart is bearish on the MACD. RSI is retracing. PSAR is of course below the price line. 15-minute chart is like this. So if you are a believer of a male star, then you have to wait for the 15-minute chart or the 5-minute chart, and take a trade on it. Let's take the volumes here. Volumes are relatively high. Here it's 2.9 million, so it's a large play. I mean, since it's a very large company, as far as liquidity is concerned and the volumes are concerned and the turnover that goes into these counters are concerned, this is something that you need to watch, right? Even though the prices haven't gone up above all four main moving averages, worth looking at this. Okay. Yeah, good night, Mr. Gandhi. Right. So that's all from our side. Let's see. One person is asking for today only a small participation. That's okay. One person is asking for SCMB. Right, daily chart. Let's take these also. Still very early, so there is nothing to look at. It's still very early on the SCMB. Right. So that's it for the day. Thank you very much for, even if the crowd is small, I'm really happy that you all waited, because you are interested. And whoever is who are unable to come, they can access the recording. So once again, thank you very much. As I mentioned last Saturday, if there are no issues in the power or with power cuts, we will meet up again on next Saturday. So till then, have a nice weekend, and wish you a profitable new week ahead. Okay. Thank you very much. God bless.
Thank you very much, Salih.
Welcome.
Thank you, Salih.
Thank you very much, Salih.
Thank you very much, Salih.
Thank you, Salih.
Welcome, Ajan.
Thank you, sir. Good night.
Good night.
Thank you very much, Mr. Salih.
Hello. Thank you.
Thank you very much, Salih.
Sure. Welcome. Okay.